Bitcoin just dipped below 100,000 for the first time in weeks, and everyone is saying that the bull market is over. No! To be honest, we've been saying this for like the last 2 months, but you've got Gareth Soloway saying Bitcoin could be going back to 70K. Mainstream media challenging Eric Trump saying how Bitcoin's record performance may be done. And every armchair analyst screaming, the top is in. Today, I'm gonna show you why this might be one of the most bullish setups and one of the biggest bear traps we've seen all cycle. Welcome back to Simply Bitcoin Satoshi. I'm Sophie, and today we're gonna talk about what the fuck is going on, because I know you're probably panicking, but there's no need. Just check out what Saylor has to say about the price dip today.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
But no, that's interesting, though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you were buying at both. If you were looking over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about 74,000 a coin. We all want to go to the moon, but if you want to ride the rocket, you got to be prepared to pull the G's. Over 5 years, Bitcoin's had like 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting around 68,000. And then after the Trump election, we had this incredible rally from 68 to 106,000 in 5 weeks. If you go back 14 months, we were about 55,000. And so if you'd said we're going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations. Over 5 years, Bitcoin's up about 50% a year on average for the 5 years. Gold and S&P are studying the cost of capital at 14%. My company's strategy is up 71%, equivalent to NVIDIA. There's no other stock in the S&P that's done any better. So I think the volatility comes with the territory. If you're going to be a Bitcoin investor, you need a 4-year time horizon, and you need to be prepared to handle the volatility in this market.
All right, let's start with what actually happened on the chart before we get into the macro galaxy brain stuff. Over the last 24 hours, Bitcoin sliced through that 100K floor, nuked straight down 98K, and kissed the mid 90Ks, printing new 6-month lows. Some exchanges even showed wicks close to 94,000. That wasn't just a gentle correction, okay? That was a full-on liquidation cascade. Over $1 billion in leverage positions were wiped out in a single day. Roughly half of that on Bitcoin pairs, as longs got margin called into oblivion. Think of it like this. The market was leaning way too far in one direction. Everyone was positioned for Moonvember, rate cuts, 150K straight line up, and when the price cracked below that key 98K support, it was like kicking the chair from underneath us. Stops got hit, margin calls fired, positions auto-sold, and that selling triggered even more selling. That's a cascade. And not just derivatives. Spot Bitcoin ETFs in the US just logged in their second largest outflow day on record. Nearly $170 million walked out the door on November 13th. Since October 10th, Bitcoin ETFs have seen over $3.4 billion in net outflows. Gareth Soloway, an unsuccessful short trader who has been shorting Bitcoin since 36K, is now crawling back out to warn that we are headed to 70K again. Check out this clip.
The Bitcoin chart
right now trading above 60,000. So just a heads up, I always try to be transparent with you guys. I added my last add to my short on Bitcoin just above 60,000, bringing my average to about, I think it's 56,405, give or take. Don't quote me on that exact number to the dollar, but that's what I remember it being, 56,405. We'll see if I get wrecked or not, as some of you guys like to say.
Look, I'm sorry I called him an unsuccessful short trader. I meant an unsuccessful technician. This man has been calling for Bitcoin's death since before the bull market even started. Good news though, Gareth finally cut the man bun. Bad news, he still got wrecked. And he's not alone. Polymarket is showing a 73% chance that Bitcoin falls below 90,000. Because apparently, the second the number goes down for 5 minutes, every bear becomes a profit. And that brings us to the real question. Why did this move happen now? Is something broken, or is this just leverage getting flushed down the toilet?
Selling is the most bullish thing in Bitcoin. And let me explain why. Every single sold Bitcoin has the same weight as every single other sold Bitcoin. One sold Bitcoin is one sold Bitcoin. The difference is we're now seeing it, as you said, at 120K versus 10K. And yet the market went down. I think the total was 9.5 billion or something. The market went down 3.5% and then did a Dalai Lama candle straight back up. When we're measuring sell side, what we're actually measuring is two things. Buy side, because you need a buyer for every seller. So when you see a lot of sell side, yes, that is the thing that can temper out a bull and slow the market down and top things out. But if it gets absorbed, you're actually also measuring demand. So I will often look at sell side pressure as a proxy for demand. And when I see the market absorb 9.5 billion and not go down, guys, imagine who is buying, the size and scale of those buyers. And the other thing it's measuring is the rotation of holders. Guys from 2010, they have done their job. They came in, they supported Bitcoin at its weakest point in time, and they hodled 80,000 odd Bitcoin for 14 years. They got Bitcoin to 100K. 100K was the dream scenario. Oh my God, that's our million. People have come in later cycles. That's the million target for us. They hit it. They got there. They made it. They can't really make it more. Like, what's the difference between 10 billion and 20 billion? It's like, I'm in the billion club. It doesn't matter. So for them, they've already made it, but they're rotating those holdings. All right. Think about where you got your coins from. You got your coins because someone else was willing to sell, and that's given you an opportunity. Like for me, if nobody sold the coins and we went straight to $1 million and we repriced immediately, straight up to the level. And actually, there's a good analogy here. If you just observe the shitcoin world, they're going through a crisis because what they would do is the VCs would bid up the token to massive premiums, and then they would list it on Binance, and it goes down only forever. And you know what that does? That destroys people's confidence, and they don't want to hold the thing. The process of the market actually helping people get ahead, like if you weren't able to buy your coins at 1,000, at 10,000, at 20, at 50, then you wouldn't have any coins. It would just go to $1 million, and you'd be like, oh, look at all those guys who have been around since 2011, and they got giga rich. That's actually not a healthy thing. The process, right? The process of markets and the process of Bitcoin getting there, and the fact that we don't just teleport to $1 million is actually why Bitcoin is special, because it is the journey that we've all been on. And I like to also think about it from a more philosophical standpoint. What is the important part of Bitcoin? We can talk about the consensus rules. We can talk about mining. We can talk about the blocks. We can talk about all that stuff. At the end of the day, it's the UTXO set. It's the journey that holder base has gone through, the collective intelligence of coins changing hands, moving between exchanges, going between cold cards and whatever else. And then eventually we get to where we are today, which is after all that proof of work. This is the current standing of that ledger. And if all the other pieces broke, proof of work breaks, or this breaks, or that breaks, moving that UTXO set somewhere that's going to look after it, that's actually what Bitcoin is, in my view, from a very philosophical standpoint. So the history is what matters. And that's also the only thing you can't replicate.
To understand this move, you've got to zoom out from the Bitcoin chart and look at the macro backdrop. The big story is this. Markets are suddenly feeling less confident that the Federal Reserve is going to cut rates in December. A week ago, markets were pricing in a strong chance of a cut. After a string of cautious comments from Fed officials and some hotter than expected inflation data, that probability has dropped sharply. And traders are waking up to the idea that higher for longer might actually mean higher for longer. When rate cut hopes evaporate, risk assets get hit. It's not just Bitcoin bleeding here. Tech stocks have rolled over, AI names have cooled off, and you're seeing a broad rotation out of the risk-on trade and back into boring things like bonds and money market funds. Remember, at a $2 trillion market cap, Bitcoin is no longer that tiny, uncorrelated rebel asset hiding in the corner. It's plugged into global liquidity. When yields move, when central banks flinch, when macro hedgies reposition, Bitcoin catches those flows instantly. Although right now it looks like Bitcoin is catching some strays. But whatever, I digress. Now layer in what happened in October. We already had a historic liquidation event last month.
That was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami.
One of the biggest in Bitcoin's history, where estimates range from 19 to $30 billion in leverage positions getting vaporized in a single brutal session. We don't talk about that day. But that set the tone. That market was already fragile, jumpy. So fast forward to this week. Fed doubts spike. ETFs finally see a big outflow day. Traders who were positioned for a clean straight line to 150K realize that maybe, just maybe, they were early. And everyone runs for the same exit at the same time. That's how you get a 5 to 7% daily candle on something this big. Here's the key point. Nothing about Bitcoin's code, monetary policy, or long-term thesis changed this week. What changed was macro expectations and positioning. The selling is about how people were holding Bitcoin with leverage, with ETF shares, not about what Bitcoin is. And in every cycle, those two stories diverge. The short-term casino and the long-term asset.
If you said the current all assets in the world currently equal about $900 trillion, underneath those assets is about $600 trillion of debt. If you include all of the liabilities and unfunded liabilities, but 600 trillion. And so if that debt went insolvent, all of those assets are worthless. Right, because everything would collapse. So people are measuring their assets within a system that debt is already insolvent, and they're pretending that debt is solvent. That debt requires more and more manipulation of money forever, exponentially more manipulation of money, so that the assets don't collapse and everything within that system doesn't collapse. So we're at the almost end of days. It could go on a bunch longer, but that system is getting more and more centralized, more and more controlled, and because it has to. We'll go into that afterwards.
Okay, now let's look under the hood, because while price is screaming panic, the on-chain supply data is whispering something very different. First, exchange balances. As of this month, the total Bitcoin held on centralized exchanges dropped to around 2.4 million Bitcoin, a multi-year low and roughly a 14% decline from where we started this year. That means fewer coins are sitting in places where they can be market sold with one click. Coins are moving into cold storage, custodians, ETFs, and long-term vaults. In the beginning of October, when Bitcoin was ripping to new all-time highs around 127,000, the same dynamic was already in play. Exchange balances fell to their lowest levels in about 6 years. Second, inactive supply. The amount of Bitcoin that hasn't moved in a year keeps trending up, not down, even with this pullback. Historically, every major parabolic run in 2017, 2021 saw inactive supply surge as long-term holders just sat on their sacks and refused to sell into fear. Since 2024, that 1 year plus inactive supply has climbed another about 10%, and it's still rising. Third, profitability. Even at 95,000, roughly 70 to 72% of the entire Bitcoin supply is still in profit. That's not what a blow off the top, everyone's wrecked scenario looks like. That's what a mid-cycle flush looks like, where a lot of long-term holders are still massively green, and only the latest FOMO buyers and over-leveraged traders are really feeling the pain. Basically, these people who just got into Bitcoin are paying their dues. Now, there is one piece of data bears are pointing at. Long-term holders have sold around 815,000 Bitcoin over the past month, the largest wave of long-term holders selling since 2024. But here's the nuance nobody on CNBC bothers to explain. In every bull market, long-term holders eventually pulse coins back into the market. That's literally how we get to new all-time highs. Somebody has to sell to the new buyers at the new price. Given how low exchange balances are, it looks like those coins are being absorbed by stronger hands. ETFs, institutions, sovereigns, corporate treasuries, and hardcore self-custody plebs. So when you put all of this together, low exchange supply, rising inactive supply, majority of coins still in profit, it doesn't really scream end of cycle to me. It screams aggressive repricing in the middle of a likely bullish setup. And while we're talking about the infrastructure behind Bitcoin's long-term strength, the stuff that actually keeps the network secure, regardless of the price action, let's shout out the people who are building those rails. Sazmining. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable, carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you do too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining actually proves it. Let's just say if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
But no, that's interesting, though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you were buying at both. What's, if you were looking over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about $74,000 a coin. The point that I would make for any investor is if you have money you don't need for 4 years or longer, and if you don't trust anybody, you want no counterparties, you just want to own a piece of the global digital economy, you buy Bitcoin. It's the commodity.
Right now, you've got retail panic selling spot. You've got over-leveraged traders getting liquidated, and you've got ETF holders rage quitting after a 20% pullback. But on the other side, the players with long time horizons are buying. Even Eric Trump was just on Bloomberg talking about why he's still bullish on Bitcoin, even with the crash. Check out this clip.
On this one for you. Guess what Bitcoin prices were exactly 2 years ago from today? I'll tell you because you wouldn't know. 36,500 was the cost of a Bitcoin 2 years ago. We are up 180% in a 24-month period. The spot price of BTC is probably the number one performing asset, of any asset. And this is coming from a guy who believes in hard assets, right? I mean, I run one of the great real estate portfolios anywhere in the world. cryptocurrency is absolutely on fire. Cryptocurrency is taking on the whole world.
Well, Bitcoin is up this year by about 5%. The S&P is up 15%. The NASDAQ 100 is up 20%. Gold is up close to 60% this year. No, I'm just saying.
Do you want to reverse? Hold on, Carol. Do you want to reverse that? I mean, do you want to go back 2 years? Do you want to go back 3 years? Do you want to go back 5 years? Do you want to go back 10 years?
I know how to dice and slice the market.
Have gone up on average of about 70% a year over year for the last 10-year period of time. All I'm saying is if you invested in BTC 2 years ago, it was probably the best investment you could have made. If you invested in BTC 5 years ago, you're sitting on infinite amounts of money, right? BTC has been probably the highest performing asset of the last decade, right? Now, also with BTC comes volatility. With crypto comes volatility. Volatility is our friend. Volatility is something that should be harnessed, right? And so I think Bitcoin is going to continue to massively overperform the markets. Of course, you're going to have drawdowns, right? I mean, every cycle has drawdowns. You were talking about NVIDIA, in the intro clip to introducing me today, and how they're down 4%. And this is one of the largest companies on earth, if not the largest company on earth, right? I mean, that's down 4%. You're going to have drawdowns and things. That's life.
No,
but look at the historical performance of an asset, and nothing has compared to what Bitcoin has.
It doesn't matter if you're stacking $50 a week, running a family office, or part of one of the most famous political families in the world. People become experts in Bitcoin's death the second the price dips. People who actually understand the asset, they aren't panicking. Now, here's where it gets interesting. A lot of macro analysts, including Mark Moss, believe the Fed may have just triggered the next liquidity crunch. And if that's true, massive liquidity may be about to enter the system.
Central banks always choose inflation over deflation. Always protect the financial system over price stability. Now, Ben Bernanke said it explicitly in 2002, quote, "The U.S. government has a printing press that allows it to produce as many dollars as it wishes at essentially no cost," end quote. That's the Fed's nightmare, deflation and collapse. But inflation, they can create that on command. Now, the track record, of course, proves this. 2008, QE. 2012, Draghi's, quote, "whatever it takes" program. 2020, 9 emergency programs and massive QE. And now, well, they're ending QT on December 1st. Powell already said that the Fed, quote, "will need to expand the balance sheet again." Lori Logan said that they'll need to, quote, "begin buying assets." So they told you what's coming, right? They'll print. Maybe they'll call it something else. Maybe they'll call, liquidity operations, or they'll call it not QE. But whatever you want to call it, money is going to be created. And so if you're holding dollars in a savings account, you're about to get diluted. If you hold assets, stocks, real estate, and Bitcoin, anything with real value or scarce supply, you've at least got a chance to keep pace with the printing press. But this isn't neutral, right? QE creates winners and it creates losers. The top 10% own over 2/3 of the nation's wealth. They own 80% of the stocks. So when the Fed pumps asset prices, they benefit. But savers, they get left behind. And then the wealth gap, it widens, right? This is the data. This is the pattern. And it's about to repeat. So the only question that you should be asking yourself is, which side of the line are you going to be on, right? If we stack all this up, the Fed drained liquidity while the government spent like it's still in a crisis. That triggered a funding crisis. Stopping QT just freezes the problem, but it doesn't actually fix it. And when they restart QE, which is what they're doing now, it's not going to be like the 2010s. You're going to see both asset inflation and consumer price inflation at the same time.
If he's right, this entire crash might not be a top. It might be a bear trap engineered by bigger players while retail freaks out. Now, before we zoom out and put a bow on this entire move, quick break, because surviving these drawdowns isn't just about conviction. It's about having the tools to keep you liquid without selling your Bitcoin. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, zero penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap up the show. So, where does this leave us? In the short term, this crash is a reminder that Bitcoin is still Bitcoin, brutally volatile, ruthlessly honest, and completely unforgiving to leverage. If you're overextended, the market will find you and they will liquidate you. But structurally, the halving math hasn't changed. The 21 million cap hasn't changed. Exchange balances are still multi-year lows. Inactive supply is still climbing. And even at 95,000, most of the network is still in profit and holding. The narrative has changed from straight line up only to, oh wait, this is a market with macro liquidity and human emotion. That's not bearish, that's just reality. So here's my challenge for you. Instead of asking, is the bull market over, ask, what side of this transfer do I want to be on?
There are going to be real winners and losers. And you're not going to get a do-over. You know, you're not going to get a do-over. It's not going to be like, oh gosh, I missed it, maybe I'll, you know. I mean, it's like we could wake up one day and the government could say, you know, we're going to a gold standard, we're taking the price of gold up to $20,000. Well, you either own gold and gold mining stocks or you don't. They're going to go up enormously. The same thing with Bitcoin. I mean, you know, the U.S. could say we're going to do a strategic Bitcoin reserve and the Bitcoin price could triple. Well, if you don't have any, you don't benefit from that.
Do you want to be the person panic selling into a leverage wipeout and ETF capitulation? Or do you want to be the person calmly stacking when the fear and greed index is screaming fear and fundamentals are intact? Drop a comment and tell me, are you buying this dip, sitting on your hands, or did this crash shake your conviction? Be honest. This is how we all get better. Either way, remember to zoom out, stay humble, take self-custody, and stop letting red candles rent space in your head. Stack, slay, and stay bullish. I'm Sophie. This is Simply Bitcoin's Satoshi. Hit the like button, subscribe to this channel, and turn on the notification bells, and I'll see you in the next one. Bye!